If you want to make more money trading and you want to maximize the amount of profits that you make from each trade, you need to do this one thing. And that one thing is scaling in. So in this lesson, I'm gonna teach you how to probably scale into trades accurately so that you can make money on not just one trade, but two trades, but three trades, and multiple trades, and just like maximize the amount of profits you can make. You must understand that successful traders do not just rely on one trade, one position. They have multiple trades running into the take profit, and that is how they can make the most amount of money out of like one trend direction. So when do you actually scale into trades? You scale in when the market is creating structure. Here's what I mean. So let's say that price is in the uptrend, and as we all know, price does not move up in a straight line, right? Price has to go up, retrace a little bit, go up, retrace a little bit, go up, retrace a little bit to create your new higher highs and higher lows, higher highs and higher lows. So that's the first point, right? This is when price is creating structure, and when you scale in, you want to wait to see some sort of pattern that show you that price is in an uptrend or a downtrend. So right now, since price is in an uptrend, let's say you enter for a buy position or somewhere right around here. So my next question for you would be, would you scale in right here or right here? So this is A and this is B. I want you guys to comment down the answer below. Like, would you scale in at A or would you scale it at B? Don't fast forward this video to look at the answer, or don't check the other comments, alright? Just be honest and write down your answer in the comment section, A or B. Where should you scale in? So the correct answer is that you want to scale in at B. Right, you want to scale in at B, which is somewhere right around here, because right here, this is when price is done retracing. Okay, price is done retracing, and it's going to continue to go up in the overall uptrend. So you enter for one buy position right here, and then over here you enter for another buy position. So you don't just have one trade running to your take profit. Now you have two trades running to your overall take profit, which could be maybe like somewhere right around here. So now you got two trades running to your overall take profit, which is this area right here. So why do we scale in? Because instead of making money on just one trade, like let's say we did not scale in, right? We just focus on holding this one trade right here. We hold it all the way up here. We make money one time. But right now, after you scale into the trade over here, so you enter for another buy position on top of your current buy position. So now you have two trades in a row. Now, you don't just make money on one trade anymore. You make money on one trade, two trades. You make money on two trades. So now you make like literally like the double amount of profits they can potentially make. So I hope that makes sense to you. So that is why you should consider scaling in, right? So right now I'm gonna hop onto the charts to show you guys how you can properly execute this entire scaling in and out strategy. So right here, there's this beautiful uptrend that is being formed right here, and I'm gonna show you guys how you can scale in to multiple trades in this overall move, right? So let's say you enter for a buy position like somewhere right around here, because you see there's a lot of buying pressure at some sort of support area, and you got your three confluences, whatever, and you enter for a buy here. And then let's say your take profit is all the way up at the next key level, which could be like somewhere right around here. So you place your take profit all the way up there. So this is not scaling in, okay? This is just like holding one trade to your take profit, right? So what the concept of scaling is that we want to wait for price to create structure, then that is when we scale in. So what I mean by that is that when price is like somewhere right around here, we are not looking to scale in, okay? Because price has not created structure right here, right? What we are waiting for is to wait for price to create a new higher low like this, like a new structure, this new higher low, and then that is when we can scale into the buy position. So right here, price has push all the way up, but it has not retraced yet. So we wait for the price to retrace. And you can see as time passes, price has retraced right here to create your new higher low. So right here, this is your new higher low, because this low is higher than this low, right? So this is the new higher low. So at this point of time, I'm looking for a few things, right? I'm gonna do a few things. Number one is that I want to move my stop loss of my first trade, right? Let me repeat myself. I want to move the stop loss of my first trade. So this trade, our stop loss was like maybe like somewhere right around here below like this support area, right? So this could be our stop loss. So right now, I'm gonna move the stop loss from here all the way up to this area right here, because this is the new higher low, and when price creates structure, we want to move our stop loss into profit or at least break even. so that even if we lose the trade, we kind of like secure like a good amount of profit, or in the worst case scenario, you don't lose money at all because like you place your stop loss at break even, right? So right here, that is why we move our stop loss. So we move our stop loss, the original stop loss, from right here all the way up to this new higher low. And you don't want to be placing it like fucking like right here, okay? You want to give it a little bit of breathing room, so I'll place it like right here. Okay, so now this is your new stop loss, and I've moved my stop loss all the way up there. So let me just adjust this. And TradingView, this stupid ass tool, does not allow you to adjust the stop loss, which is like freaking stupid. Yeah, but basically, let's just assume that the stop loss is right here now, okay? So right now, that's the first thing you want to do when price is retracing to create your structure, right? The second thing you want to do is that, right, you can consider scaling in and add another buy position on top of your current buy position. So right now, we only have one trade, right? This is the only trade that we are holding. And if you want to scale in, we want to add another trade on top of this first trade. So right here, price has been pushed up, and right now it's came back down to create a new higher low. So at this point of time, at this new higher low, I'm looking for an opportunity to scale in for another trade. So right here, you can see price starts consolidating, and I will enter for a buy maybe like somewhere right around here. Let me just put on the moving average. Maybe somewhere right around here. Yep, somewhere right around here when the moving average starts crossing over. Okay, I've done like an entire video on how to use the moving average. You can find it on my YouTube channel. Just refer to that video if you still do not know how to use the moving average. I've already done like so many goddamn videos, so go watch those videos. Yeah, but with that said, I'm gonna be entering for a buy position right here because price has just created your structure. It has created a new higher low. I'm gonna be entering for the trade right here, place my stop loss below the last higher low. So this is the most recent higher low right now, and I'll place my stop loss below it, place it a few pips, which is like the same stop loss as what I did for the first trade. And now my take profit will be the same thing. I'm gonna be taking profit all the way up at the next key level, just like my first trade. Yeah, so basically price got pushed all the way up again. And remember, you do not want to be scaling in like somewhere right around here, right around here, right around here when price is getting pushed up, right? You want to wait for price to retrace to create structure. Then that is when you can consider adding another buy position. Let me repeat myself. So let's say price is like creating structure and creating like this, right? And you enter for a buy like somewhere maybe like right around here, and price is already pushed all the way up here. You do not want to enter for a buy here. In this case, you want to wait for price to retrace to create a new higher low. Then that is when you can enter for a buy. So the reason why I say you cannot enter for a buy right here is because if you enter for a buy here, where should your stop loss be? All the way down at the previous higher low, and the previous higher low is down here. So you can see that's a very wide stop loss, and if you lose that trade, you're pretty much effed, man. So that is why I say only move your stop loss when price creates structure, and also only consider scaling in when price creates structure. So at this point of time, I'm still not scaling in. I'm very patient, and you can see price once again create a new higher low, right? So this is the higher high, higher low. Next push, higher high and higher low. So I can see a higher low being formed like somewhere right around here at this area here. Yeah, I can see there's a little support area being formed right here. Whenever price gets down here, it always like pump back up. Price come back down here, pump back up. So at this point of time, I'm looking to enter for my third position, right? So I've scaled in once, I've scaled in twice. And right here, by the way, before you do scale in, what should you do? You should move your stop loss, right? So these two trades, the stop loss was right here, right? But right now, I'm gonna move my stop loss all the way up at this last higher low right here. This is the last higher low, this is the most recent higher low right now, and I'm gonna place my stop loss a few pips below it just like this. So at this point of time, I've moved my stop loss. So the second thing I want to do is that I can consider scaling into the trade. I can consider adding another buy position. So that is what I want to do, like somewhere right around here. I will enter when the moving average crossover, somewhere right around here, place my stop loss below this support area, place my take profit, the same take profit as like usual, which is this area right here. Now, we don't just have one trades running to our take profit. We don't just have two trades running to our take profit. We have literally 3 trades running to our overall take profit, which is all the way up there. So in this scenario, I'm gonna be making bank. I'm gonna be making bank if like this trade plays out as I expected, right? So you can see based on just this one overall up move, right? This overall one up move, I can potentially make money not one time but 3 times. So you can see as time passes, price eventually went up there and smashed our take profit right here. You can see price smashed our take profit, and at this point of time, all 3 trades are pretty much close and we have secured the bag and get out of the trade. And that is like basically like the concept of scaling in. So what about scaling out? Right, scaling out is basically the opposite of scaling in. Scaling in is like adding more positions. Scaling out is removing more positions. So instead of like having all 3 trades running to the same take profit, right? How you can scale out on this trade is that you enter for a buy here, and then as price creates higher highs, higher lows, and then you enter for another buy, you scale in right here. And then as price went all the way up here, what you can do is that you can consider scaling out. So scaling out is removing position, right? So what you can do is that you can even like exit out of this trade, right, and just like secure a good amount of profit when price is all the way up here, so that this can like guarantee like you have the back, you know, like you're already up so much. If the trade go all the way down here and you lose money, it's on you, man. It's on you for not securing the back. So even to play safe, you could like consider scaling out, like as price goes all the way up here and then you can see price starts retracing a little bit, then you can consider scaling out somewhere right around here and just close the first position. So after you have scaled out the first trade, now you only have 1 trade running to your take profit, and then later on you will add another trade. So that is basically like the concept of scaling out. Scaling out, once again, is basically removing positions, removing the trades, and this is more to like play it safe so that you can secure some profits back into your account. And scaling in is basically adding more position, so adding more trades on top of the first trade. So that is what I mean by scaling in, right? So if you can use this like strategy carefully, trust me baby, when I say that, you can make so much more money. So next, I'm gonna show you a few more examples, and the next part is gonna be a little bit more advanced because we're gonna be using Fibonacci retracement tool. So once again, if you do not know how to use Fibonacci retracement tool, which is like this bollocks tool right here that you can see right here, this amazing tool, go watch my video. I did like an entire full length complete tutorial on how to use Fibonacci retracement, which you can find on my YouTube channel. 1 video, not just 1 video, 2 videos on how to use your Fibonacci retracements. So just go search and just go watch this video, okay? This Fibonacci retracement tool is the most amazing tool ever and you must know how to use it. So that is what I'm gonna combine it with like the scaling in and out strategy right now. So right now it's a little bit different. So instead of uptrend, we are in a beautiful downtrend right now. It's a downtrend right now, and I can like draw a trend line right here, place like a little resistance area somewhere right around here. It's a resistance area right here and a trend line right here. So at this point of time, I'm gonna be looking to sell because it's in a downtrend, and as traders, we always want to make sure that we trade with the trend because the trend is your friend, right? You want to trade with the trend. So I should only be looking to sell. So let's say price creates your lower highs and lower lows, and then you decide that you want to enter for a sell right here because you see like, oh, price is bouncing off the trend line and it's just like heading back down, right? So you enter for your first sell position right here, and you place a stop loss above the last lower high, which is right here. This is the last lower high, and you place it right here based on structure. And you place a take profit. Maybe let's say you place it all the way down at like, I don't know, somewhere right around here. Maybe you place it all the way down here at 1:3 risk to reward ratio, right? So at this point of time, as price goes down, like this, as price goes down, you should not be scaling in yet. You should not be entering another trade yet, because if you entered for another sell position somewhere right around here, randomly, where should your stop loss be? All the way up here. All the way up here. You can see that's like a super wide stop loss. And I also want you guys to note that sometimes price will just go straight up or straight down without creating structure, and you will not be able to scale in. That is why if you have the opportunity to scale in for another trade, make sure you execute that trade. Consider scaling in for another trade. And the reason why I say you cannot just enter anywhere is because, remember, our goal is to be a sniper, to take one good trade, pump, and then another good trade, pump, and then another good trade. That is our goal as a trader. Our goal is not to be like a freaking machine gun that just like and making like so many bad trades in a row and not a single good one. So quality over quantity when trading. So when you are looking for a place to scale in, you have to be very precise. You have to be very accurate on where you want to scale in. So in this case, I'm not going to be scaling in right here. I'm going to wait for price to pull back, right? Pull back to create our new lower high. Then that is when we can consider scaling into the trade. So that is pretty much what price did price got pushed all the way down here, went back up to create your new lower high before collapsing. So at this point of time, let me just place my moving average once again. I would have scaled in for another sell position like somewhere right around here. When I see my 3 confluences and all that stuff, like I see, okay, trend line bounce, and number 2, your lower high is being formed, number 3, your resistance, number 4, your freaking bearish engulfing candlestick right here, huge candlestick right here with a long wick that is just like rejecting the resistance area. All the confluence for me to enter for a sell, right? So that is like the pretty much the gist of scaling in for a downtrend. And remember when I said that I'm going to combine Fibonacci, right? So what I can do is that I can combine Fibonacci on top of this like overall downtrend thing. So what I will do is that I will pull out my Fibonacci retracement tool right from here, the last lower high all the way to the swing low right here, and I can see right now price got pushed all the way up to this 61.8 level, and it gave us this big fat red candlestick, which we could have entered for our sell position somewhere right around here. Place your stop loss above it. So Fibonacci can act as like your additional confluence. So when price starts like retracing, right, I always make sure I pull out my Fibonacci retracement tool, because that tell me like where price is gonna retrace and where price is gonna go next after it's after it's done retracing. So yeah, I will have entered for sell right here when I see the candlestick just rejecting the 61.8 retracement level, and then you also have your moving average crossover somewhere right around here. We have 1 trade, 2 trade, and 3 trades running to our take profit. And let's say in this case, right, we have closed the first trade, because remember our take profit is like somewhere like right around here, right? So let's say we have closed the first trade, right? So right now we only have 1 trade right here and a second trade right here, which I just talked about just now. Second trade running to our take profit, which could be at this negative 27 extension level. So now we have 2 trades running to your overall take profit, and we have managed to scale out of the first trade, right? So that we can like secure some back into the account. Does that make sense? Some back. Yeah, but basically that is how you can scale in and you can scale out. And as you can see, price went down even further after price creates your lower high and lower low. Yeah, so you can see this is the power of scaling in, right? Once you can master scaling in, it's gonna be so much more easier for you to make money. Now you don't have to worry about like always taking 1,000 trades in one day. Remember, your focus is to be like a sniper, to take one good trade after the next good trade and then the next good trade. And I would advise you to use this scaling in strategy. It would definitely help you become a sniper trader. Another very important point to note is that scaling in only works when the market is trending, either in like an uptrend or a downtrend. It does not work in a consolidation, alright? Because how the hell are you gonna scale in when price is going like this? Or you can enter for buy here, oh sell here, buy here, sell here. Fucking stupid, man. Yeah, but basically you only want to deploy this scaling in and out strategy when the market is trending. Okay, remember, price has to retrace and create structure. Then that is when you can enter for another buy position. You can enter for another trade. You can scale in. You do not want to enter anywhere. Okay, you must be like a sniper. If scaling in isn't for you, because you might be like a more chill and relaxed person who do not like to look at charts all day, it is perfectly okay. Okay, it is okay. Placing one trade is just fine, right? Your personality might not be the type that like to scale in, and you might be like a play it safe kind of guy. Then in that case, one trade is just fine. The reason why I advocate like scaling in so much is because it acts as your risk-free trade also. It works as a risk-free trade because remember, once you enter for a buy position right here, and after you scale in, you also move your stop loss from the first stop loss and you also move it into your profit. So the first trade is essentially like a risk-free trade. And even if you lose that trade, you're just like, okay, you know what? I just got stop out in some profit or even in some like break-even scenario, and that really helps with your trading psychology because now you know that you kind of secure the bag a little bit. So I would say just do whatever works for you. I'm not gonna force you and tell you that, oh my god bro, you gotta try this scaling in and strategy, you must adopt this scaling in strategy, or I'm gonna no, I'm not gonna do that. Your own foundation is the most important thing ever. I don't care if you take like 1% of whatever I just shared with you in this video and implement it into your trading arsenal, or 100% of it. I don't care. Just find out what works for you and build your own foundation based on all this knowledge. And trust me baby, that is the only way where you can become a profitable trader. Not by like copying every single YouTuber strategy that you can see, but by finding your own strategy and sticking to it. And I almost forgot to mention about the GBP/USD trade, but basically when I scaled in right here, I will have moved my stop loss into break even, which is like somewhere right around here, because this is when price has created your new structure, right? And then as price goes down, just move your stop loss to break even or even in the profit. Scaling in and out is a very important concept that you must understand if you want to become like a successful trader, and whether you want to scale in or out is all up to you. Like this video if this video was helpful to you guys, and consider hitting that subscribe button to become part of our movement, to become part of our tribe. And make sure you watch this video on the Fibonacci retracement tool to learn more about Fibonacci, because like I said, this is the most important thing ever when it comes to trading, and it's the most useful tool that I use to make a lot of money. And remember, you're just one trade away. Mwah.